Another area of strength is our EV strategy, which I wouldn't trade for any of our competitors. We moved early. We've learned a lot on Gen 1 from our customers, the global market dynamics, and what it requires to be fit to compete. No doubt there's a global price war, and it's fueled by overcapacity, a flood of new EV nameplates, and massive compliance pressure. In our home market in the US, no OEM is immune. Since Q1 of last year, EV volumes have grown 35%, while revenues in total are flat at $14 billion. That means the progress on volume has been fully offset by prices. We're expecting roughly 150 new EV nameplates to hit North America by the end of 2026. And some of our competitors are already resorting to very aggressive lease tactics, even on their brand new products, which creates huge residual risk and overhang and brand damage. What we're doing about these market dynamics, well, we're focused on cost. We've already reduced $1 billion in our EV costs this year. We remade our battery footprint. We trimmed our capacity by 35% in line with where we think the market will be in a few years. We accelerated the mix of our batteries, emphasizing LFP will be the first one to manufacture in the US, and that battery will leverage the IRA production tax credit. We're shifting new launches, focused on getting the products we do have in our EV portfolio profitable within the first 12 months. And we're deep into the design and engineering of our next generation vehicles. Boy, are we excited about these coming out in the next few years. You know, in 40 years in the industry, I've seen a lot of game changer products, but the midsize electric pickup designed by our California team has got to be one of the most exciting. It's an incredible package and consumer technology for a segment we know well. It matches the cost structure of any Chinese auto manufacturer building in Mexico in the future. How do we know that? Because 60% of the BOM has already been quoted. Let me double click on the EV business. We applied lessons really early that we learned on Mustang Mach-E across our lineup. In the last 24 months, we've reduced the Mustang Mach-E's cost by $5,000 per unit. As you know, Mach-E is second to Model Y in the segment for sales and transaction prices, despite being in the market now for several years. And we continue to break down the friction or barriers to adoption for mainstream ICE customers. We're the first to join Tesla's supercharger network, and we'll be shipping about 100,000 adapters by the end of this year. We're the first to offer complimentary home charging and installation. We call it the Ford Power Promise. And we've seen a huge uptick in interest on our website from the Power Promise. But our dealers are also becoming a competitive advantage for mainstream customers. Take, for example, Tim Hovick and his team at Santen Ford in Arizona. In the quarter, one of the months, they sold 137 electric vehicles. And Arizona is not a ZEV state. These were incremental sales with solid gross profits for the dealers. And we're building on that know-how for the last couple of years in scaling and being number 2 across our whole US dealer network. All of our 3,000 dealers are primed to sell EVs now. We have 7,000 trained EV specialists, and 14,000 dealership hours have been spent on EVs now. Our dealer network has already installed 800 fast chargers across the US and Canada, and many more are on the way. Next year, we expect to improve the trajectory of Model E's business through cost, scaling, and we're not trading wooden nickels inside the company for emissions credits. That won't change the economics of our EV vehicles and the company as a whole.